This movement is proudly brought to you by Shelter Zimbabwe. Shelter Zimbabwe. We nurture our society.
Good day, viewers. My name is Rufaro Ojeri, and welcome to another episode of Real Estate Matters. Today with me in the studio is Kura and Christabel. Welcome, guys.
Thank you very much. Only
Thank
a
you
pleasure
for having
to be
us.
Okay. Here on Real Estate Matters, we try to talk about matters that affect the real estate market in general, starting from what it is that you need in order to acquire a stand or a house. We then also get to talk about the complexities of the commercial real estate, products in the real estate market, and so on. So in this episode, we are going to talk about, I think, the most topical over the past 12 months or so, which are real estate investment trusts. And I believe that I have gurus with me in the studio today to talk about that. So just to kick off, Christabel, I know you are part of the team that introduced the first ever real estate investment trust in Zimbabwe, which is the Tigere REIT. How has been the journey so far? We are almost 1 year since you guys listed, right?
Correct.
Maybe in the next 2 months we would have reached the 1 year mark. How has been the journey so far?
Well, Mufaro, as a first mover in the market, it's always advantageous and disadvantageous at times. So the journey, I don't know where to begin, really, has been exciting. It's been challenging, but also rewarding. So my journey with Tigere predominantly started on the legal end of things. So as the first mover or the firstborn, where REITs are concerned, there was a lot of engagement with regulators around the most prudent way to introduce REITs into the Zimbabwean market. So a lot of engagement went into trying to come up with a legislative instrument that could allow for realistic realization of a REIT. So if you look at our current legislation, we've got the Collective Investment Schemes Act, which is the primary piece of legislation which allows for the registration of REITs. It's not a specific form of legislation, specific in the sense that it speaks to all collective investment schemes.
ETFs.
Exactly. So as people who didn't exactly know what we were doing at the time, it was difficult to separate what was applicable in certain instances and what was not. So in that instance, it was pretty challenging. We had to turn to other jurisdictions for guidance on how to sort of map a way forward where REITs were concerned. When it comes to investor appetite, the market is always skeptical of a new product. It was met with a lot of skepticism, but also excitement around the first investment vehicle of its kind. It came at a time when the market was awash with ZWL. A lot of investors were looking for credible forms of investment. And I think the timing of the listing was
incredible.
Perfect. Yes, in that instance. So we managed to harness quite a lot of funding from that perspective. And also a huge selling point was the ability for someone to invest. I think it was
28 you listed, yeah.
dollars at the time, to be able to invest your 28 Zim dollars and
get exposure and risk.
Yes, and look forward to a USD yield at the end of it. So a lot of first-time investors were coming to us and saying, are you telling me, Christabel, that if I invest ZWL, I will get US dollar out of it? So it was a huge selling point, and the ability to showcase two quality products in Chinamano Corner and Highland Park definitely acted in our favor, because there hasn't been as much development as we would want, particularly in the retail and commercial space. So the ability to have those two anchor properties as real life test cases definitely acted in our favor.
Wow. I can see Christopher has a lot to unpack for us in terms of what has been happening over the past 10 months, or even before, when they were making sure that they put together the framework for the REIT. Could I know REITs is not something that's new to you? You've worked with REITs before in your life in South Africa. Over the period building up to the first REIT and the 10 months or so that we have had the Tigere REIT, what has been the experience? Do you feel like we are getting there, or we've gotten there? How do we compare with other jurisdictions that you've worked with, especially concerning the REITs in Zimbabwe?
So it's been really exciting to watch, and it's part of my raison d'etre to be back in Zim. I've watched the South African market go from 4 listed counters in 2 vehicles, that property loan stops, that property unit trusts. They unified that, they got the tax legislation right, and they created the REITs. And that sector grew from 4 billion to, at its peak, towards 700 billion rand in market capitalization. We've got to get this right. So the Zimbabwean legislation is Zimbabweanized, right? So there's some bells and whistles that other jurisdictions allow, but are not allowed in Zimbabwe. So the big ones are CGT relief, where where you treat your physical building as stock, and if you sell it as a REIT, you don't pay CGT on that. We're not yet there. And over and above that, in South Africa, any private individual, the 3 of us, can put together a portfolio and we can take it to the market and it gets listed as a REIT, and then we enjoy the tax benefits. Here, our revenue authorities said, Matimanyira Bamberi, too much. So they have only allowed pension funds who have existing assets, because pension funds don't pay tax, for them to come into this. So it's tax neutral from them. But if the Rufaro portfolio is generating tax right now for them, they're saying that can't go into a REIT. Their concession was, if you build something new from the date of the proclamation of the Finance Act, November 2020, from that date, line in the sand, after that, if you build something new as a private player, you can then bring that into the REIT. They're making the argument that they didn't have it in the tax net before, so they haven't had a loss, so it's actually a gain. So those are a couple of the nuances, but the format has generated a lot of excitement, because our point of pain is our pension funds are trapped, asset-rich, cash-poor. We see it mimicked in our parents' lives, that yes, they've got the house paid off in Hatfield, but they don't have a pension, and Kamari Karukubuda from the National Social Security is not taking them anywhere. So this vehicle allows the pooling of capital into a safe, I call it a triple legislated vehicle. You need to get a SEC license, you need to have an approved asset manager, then you need to put it in the ZSE. So it's not a space where fly-by-nights, land barons, space barons will want to play. It's somebody anenge akarongeka and has strong credentials and are obliged. There's no other instrument other than a bond where you're obliged to pay a dividend out. So it comes into the market, and our retail investors are loving it. Tigere did us a favor, where they even gave us a small threshold. You guys know, we make a bundle of shares. I think it was 1,000 or so. As a first-time investor, come in and buy. So that now gave us an instrument that I know that need too much sense, need too much shares to Tenga. I know on the quarter I can take my nieces to Tenga creamy in a cone.
Yeah.
At Highland Park.
Yeah. That's That's quite comprehensive and interesting as well. So you were talking about the regulators saying that for you to have your property transferred into a REIT, either it should be built after November 2020, or it should be part of a pension. What's the reasoning there? You also highlighted that pensions don't pay tax. Is it because they are scared that some property owning companies that pay tax will just transfer their properties into a REIT? Then what's the reason?
So with my lawyer right next to me here, I can't presume to know the mind of another person. But yeah, look, it's a sticky issue. So that they've forgone that income tax, and then you as an individual, you're only paying withholding tax on the dividend that comes to you from their side, then you must now report on it. So takuvapa homework as Kura Chiota, I must now report that I've received additional income, and our systems are not typically that dynamic to pick that up. So I think to protect their tax base, they took that view. But terms and conditions apply. I do not speak on behalf of the regulatory authorities.
Exactly. While we are on that, in one of the engagements that I've had, one of the reasoning behind that differentiator was that they were trying to stimulate liquidity for pension funds because they have a significant land bank, which is exactly that, illiquid, so they were trying to stimulate that liquidity for pension funds, while at the same time trying to stimulate new developments from the new players. So that's why it was nuanced in that, okay, let's allow pension funds to participate and gain, because they've traditionally been the developers in the country. So because they needed that additional kick in terms of liquidity, they decided, let's give more incentives to pension funds. But at the same time, let's allow new players to come in with relatively relaxed tax.
Yes. Yeah.
Yes.
Yeah. I think I will then ask you to probably explain, both of you, the tax component. How is it better than a real estate operating company? But before that, because this show targets a lot of people who are in the real estate market, I would like to understand that if I'm thinking of getting into the real estate market, I'm thinking about buying a stand, I'm thinking about buying a house. How does this instrument that we are calling a real estate investment trust compare with my direct investment in real estate? Perhaps if I'm a bit bougie, I could be thinking about buying a property downtown and I'm letting it out. How exactly do they compare, and do you think they are better than directly investing in real estate? If so, perhaps just try to explain that to me. So I'm throwing that question to both of you.
I do believe that it's almost every Zimbabwean's dream to own a piece of home, to own a piece of land, to own a piece of brick that you can call your own. I'm looking at these brochures, right? This is the first thing that jumped to me when I sat in this chair. Gaia Uri Landlord stands for sale. Balance in 36 months. Entry level for Mabuku is set at 11,500 United States dollars, I presume.
Yeah.
The difference now between this and a REIT is that the entry level has significantly been lowered. When I started off, I spoke of a unit price being 28 Zim dollars at the time, and the minimum shares you could invest in were 1,000. So that's 2,800 Zim dollars, which in real money terms amounts to a very minimal amount. But with those 1,000 units or shares in the REIT, you can confidently say, I own a piece of Highland Park, I own a piece of Chinamano. And you can actively participate in the profits that are generated from these properties. So I think one of the biggest advantages is entry level. It has significantly lowered the entry level for participation in the real estate market.
So over and above that, and she's perfectly right. That's why I go and have my coffee. I go and have lunch at Upstate. I can't afford it, but I know just rent. So you've got the characteristics of the two assets. Direct asset, buying a stand from you guys in Adelaide Park. I have committed all of my money and I'm in. I've taken a position. I can't pay my school fees, which are needed at the beginning of next month. I can't liquidate a fraction of my stand, all right? If I've got the same amount of money, if I put $10,000 into Tigere, I can. The stand is not generating me a revenue. It's going to be a house that I'm going to build, and maybe if I put in a tenant, then I'm going to get revenue. But between now and then, I don't have any. So it's not producing. Shagafana Nema gold coins, they don't produce revenue. They store value, but they don't. This is an equity that holds value and it's traded in the market, so I can see a price. But then on the quarterly, I get those lovely SMSs, ZB transfer secretaries. I've paid X amount into my Nostro, X amount into my ZWL account. So you've now got a position that you can trade. If I try and sell this stand, I'm going to go to an estate agent, and the estate agent is going to charge 5% for me to exit. I go to my friendly stockbroker and he charges me 0.00 something. I can't even tell you what the percentage is. So the transaction costs are significantly different. And the worlds are different. The physical real estate versus a listed entity, the regulations are different. You and I, as much as we would love to, we can't, I don't know, balance sheet, for us to raise the kind of capital to do a Highland Park with the sophistication that's in there, the tenant mix, the rental collection, the skill that it takes to have the facilities to run that is beyond most of us. But buying a stand, I can get my guys and I can run it myself. I can go there. So those are the differentiations.
And the issue of getting in also in ZWL and getting exposure to USD dividend. But I'm not really convinced. Perhaps you can help me here. Do people then get it or appreciate it, or is it sufficient to them that you actually have exposure in real estate by getting into this kind of instrument? Either it's an equity of a real estate listed company or a REIT. Do people, in terms of utility, let's assume we have the same amount of money. The one who gets direct investment into a house versus the one who gets into these assets, either a REIT or shares of a REIOC. In terms of, do you feel like investors are at that point where they feel like I'm indifferent or I'm better off actually with these assets as opposed to imagine Uri landlord kind of situation?
Look, Zimbabwe is Zimbabwe and it's got its dynamics. Everywhere else in the world, in the States, in South Africa, there is a yin and a yang. There's an ebb and a flow. There are some points where holding direct property outperforms listed, and then there are times it goes the other way around. And the markets shift. So in South Africa right now, there is a significant discount to net asset value. So when you're buying something on the stock exchange in South Africa, the share that you're buying is worth less than the implied value of the assets that are there. In Zimbabwe, it's cheaper. In the States, with the financing issues that are coming up because interest rates have risen, the capital values are falling, so people are actually now forming REITs to buy distressed property to harness that. In Zimbabwe, we're not yet there. I saw there was a report on price to book. I think we're at a premium on price to book right now. So in theory, it's telling you to where the value is, listed versus unlisted.
Okay, then looking at the operational performance of the REIT so far, I recall that the occupancy level is 100%.
Beautiful number.
Yeah. What a beautiful number. And there are actually plans to make sure that they increase, even although it is 100%, to try and bring in things like rooftop functions and ATMs. So do you feel like the real estate market in general, especially looking at these new developments that were built post November 2020, what's your sense? Is it the booming thing, the real estate, without necessarily going back to the REIT, but just the underlying real estate market? What are you seeing? What's your take?
So I think the nature of real estate is mimicking the rest of the economy. It's a dollar trade. And as her CEO said at the Bulawayo conference, Zimbabweans, you like nice things. So where there's the opportunity to provide modern, efficient things that make us feel good about ourselves. I comment that if you go to Aspendale Pick and Park, listen to me, Aspendale Pick and Pay, right? It is better than a Pick and Pay Irku 4 Ways in Johannesburg. If you look at the refurbished OK Marts, they're looking forward, and their Meikles is improving it. So we're aspirational. So if you meet that need, you're going to attract the dollars, because I've sweated for my poor dollar that I've got in my pocket. Give me an experience, give me a positive environment, and I'm going to spend my money with you. So real estate is attracting a funded position because liquidity is tight. So somebody who's got a house along Enterprise Road or Mtoko Road or whatever, they have an opportunity to leverage an existing asset and raise some money on an already funded position. So it's unlocking value. So you're just coming with the top-up funds to do that, which is something that's quite different. If I wanted to start a factory, I'm going to have to raise all the money to buy the equipment, to hire the people, and all the rest of it. So I think it's a shorter lead time for people to realize. We want to move out of town. Town is congested. Mota zedu ziri kuklambwa. Magetsi anomboenda. To pump water to the 12th floor fast to flush toilets becomes a challenge. So we've de-Zimbabwe, we've de-CBD'd, and we've bought our own house. We've put our solar, we've put our water bowser, and we do that. But the structures, and you'd asked a question on tax. The tax issues are that if you look at there are two listed companies that trade in properties. You'll see, I'll call it 4 buckets. Top line revenue, then you're going to have a write-up, and then you're going to have expenses. In the expenses, you've got 2 categories. They're direct property costs, and then there's a very thick operating cost, which is the management that takes care of the people who are looking after it. If you compare that with Tigere has the top line. Then after the top line, you've got the direct property costs, which are about 15%. Yes, they're not doing it for free. In the prospectus, we know that the fund manager is getting about 0.9% of the value of the assets, but 30% of revenue in the 2 listed vehicles, which is going to management costs.
Before we even get to the income, the corporate tax.
Correct. If you put the 2 side by side in Tigere, you will see no line yanganzi income tax.
Yeah, beautiful. Then, Christabel, I'm going to put you on the spot. I'm interested in exposure in the real estate market, but not necessarily commercial as it is. Do you feel like there is scope for maybe you as a REIT or other REITs that are going to follow to lean more towards residential REITs, or REITs that have exposure in residential, or perhaps you just feel that it's best we focus more on commercial and maybe light industry? Is there scope for exposure in residential?
There's definitely scope. I mean, as a market, we've hardly reached the ceiling where demand is concerned. You will notice, you were talking about market trends, you will notice wherever you go, people are asking you, where can I buy a stand? Where are the cheap stands? Where are the credible property developers? And more often than not, it's residential stands that people are looking for. So while there is huge demand for residential properties and residential stands, we felt as a strategic point that we needed to lean more on the commercial and retail side of things, because there has been a recent boom in cluster housing. Every single corner has a new cluster home development. But with it, there is need for attendant and complementary services of the same standard. People need to go to work, people need to go and buy their milk in a place that is reflective of those aspirations that Kura was talking about. So it was strategic in that we felt it's not a space that is saturated. You've got other big property developers who are offering residential housing and cluster housing. So as a point of just pure strategy, we decided to lean more on the commercial and retail side of things. Is there space? There definitely still is space. We are looking to new and upcoming REITs to promote residential properties within the REIT space. I think the demand speaks for itself. So if quality products within the residential space were floated within the REIT space, I think it would fly.
You're an analyst and you know the value of covenants. So covenant is the ability of a person to pay over time. If you're operating in a universe where you're saying, I'm investing in bricks and mortar, at the front of the queue, you're going to go for a Pick and Pay, you're going to go for a Simbisa Foods, you're going to go for a Puma Fuel, right? Waiting for Kura and Rufado's money to come through. So the residential, there is a space to play, but it's going to have a different dynamic. Whereas a Pick and Pay, and okay, we look at them as our listed retailers, they've got operational gearing, and if the economy shoots the lights out, there's a gearing that performance and the ability to pay rental is infinite. The individual, you and I have affordability constraints that Maria Tino Badaraku rent ISO Dariga 30-40%, otherwise it's unsustainable, and then you're going to have a recurring of or tenants moving out. If we look in the South African market, anecdotally, don't shoot me, I think it's about 10% of the listed counters. On 30 listed counters, I can think of 3 that are specifically residential focused. And it's now a sector specification in a broader market. But right now, the relatively low-hanging fruit and the lucrative is renting out office, retail, and industrial space.
Yeah, beautiful. I think this is a good time for us to take a break. After the break, we are going to delve into the future of real estate investment trusts in Zimbabwe, especially talking about development REITs. I've had a lot of people ask me about development REITs, the scope of that, and the legalities around that. So to our viewers, stay tuned. See you after the break.
This movement is proudly brought to you by Shelter Zimbabwe. Shelter Zimbabwe. We nurture our society.
A very small percent of smart people can predict what the future holds and invest wisely. Investments that guarantee a secure future and generational wealth. Real estate is one investment that can never go wrong, especially when dealing with a tried and tested company. As Shelter Zimbabwe, having been in the property development business for over 3 decades, we derive satisfaction in giving our valued clients smart housing solutions, providing modern and sustainable built-up residential spaces of unsurpassed quality. Be a smart investor. Discover and experience the joy of owning a home. Yes, where others see just land, we see not only homes, but a lifestyle so desirable and worth living. A redefinition of urban living in a modern, urban, and serene environment. Witness the beauty of a worthwhile and secure investment by a team which brings it all together and dedicated to achieving extraordinary results. With us, you can get a service stand where you can build your dream home to suit your unique taste and style, as we offer an assortment of high, medium, and low density housing options. We are there to create endless possibilities. Our ultimate desire being to build homes specifically designed with you in mind, to give you the luxury and comfort you deserve. With 1-bedroom apartments for young professionals, 2-bedroom apartments for growing families, and spacious 3-bedroom apartments with ample space for maximum expression. At Shelter Zimbabwe, your dream home is just a step away.
This movement is proudly brought to you by Shelter Zimbabwe. Shelter Zimbabwe. We nurture our society.
Welcome back, viewers. Before the break, we promised that we will talk about the future of the real estate market, especially taking a look at development REITs. So for the benefit of the viewers out there, a development REIT is whereby you raise capital before you actually have the asset that will generate. So essentially, you're going to the market, you're raising capital, then you're using that capital to actually construct the infrastructure. Then you use rentals from that infrastructure to then pay back. I want to ask, both from a legislative perspective and just from a appetite, do you feel like there is appetite for a development REIT in Zim? Me as Rufaro, can I go to the market and say, guys, give me money, I can do something for you, then you start receiving your rentals after 3 years? Do you feel like there is scope for that?
So I'm going to talk about appetite, and I'll leave counsel, the learned counsel, to respond on the legislative side. So on the appetite, this is the gap that so many projects in Zimbabwe fall into. We have a lot of shiny shoed salesmen who tell you, on this ground, we can even erect a billboard and we can believe visa, right? But our dynamics on the ground move so fast. On a Thursday night at 11 o'clock, SI, and it changes the world. And the realities of budgeting in Zimbabwe, let alone on a hard number, even in US dollars, we've seen US dollar inflation. So there is a significant development risk, and our capital players typically don't want to play there. That's why you see that the developments that are being done by private players, because they're not run by investment committees. They don't outsource professional services. It's a guy who's got his dollar in the project who is running it to completion, and he manages his risk on that basis. That's why pension funds tend to be staying out of the development, because you can go around town, even in a personal capacity. If you go to the hills of Borrowdale, there's so many houses, go straight up a slab level, a window level, and then circumstances changed. So the appetite is for complete product, where somebody, a prudent asset manager, investment manager, somebody who's looking after somebody's money can say, I put $1 in, and then at the end of the month, we got our rental out. Or I bought into Tigere, and at the first quarter, I got my dividend back. So the appetite is for risk-treated product rather than the high risk of development, because the curve, the risk of permitting, completion risk, finishing on time, on budget, uptake, my risks actually akatumkuti.
Yeah, thanks. And Christabel, on the legality, Kura has told us that it's next to impossible because people would prefer to just get into Tigere, who's actually saying, guys, we actually have the assets there. rather than Rufaro who's coming and saying, I will then develop. But what about the legality part? The framework is it very clear that it's allowed or it's not allowed for us to have development REITs in Zimbabwe?
So our legislative framework is silent where development REITs are concerned.
Okay.
If you read our legislation, it speaks to an existing pension fund which already has a property portfolio. Or if you are a new player in the REIT market, then you must have developed property after November 2020. So because of that specific wording, it presupposes that you're going into the REIT market with an existing property or property portfolio. So there is room perhaps in future to engage with regulators on that point, because you will note the whole reasoning behind the recent launch of the real estate
committee.
The REIT Association of Zimbabwe was to tackle some of these blind spots that we still have in our legislation. It's not a perfect framework, but for now it's what we have. So should there be appetite to come up with a development REIT structure, I believe there is room to still lobby with the relevant regulators on that point. But as it stands, there's nothing that expressly prevents the setting up of a development REIT.
Yeah, beautiful, well put. And I just feel like Zimbabweans have been bent a lot of times. Yeah, especially there's been recent cases of Ponzi schemes, and not technically saying development REITs are Ponzi schemes, but if I remove the analyst batch in me, just looking at it as a pure individual, you somewhat see that, because you're saying, give me money today, I'll do something, then I'll give you money in the future. So yeah, I personally also think that it poses risks. But I think if there is one group of developers who are brave enough to show the market that it can be done, perhaps they can change the dynamics altogether.
No, trust is a very expensive commodity in Zimbabwe. If you look at the differences when people service ground, if we go to a shelter product, we drive through, if we're talking Adelaide or Rockview, we drive through at a developed, and I can go and see Baba Abednego, Mike Inan, Baba Beki, and they can tell me, kushelter takabhadhara mari dzedu, takaona ma deeds, and this is how it's gone. So we need to see proof of concept. If you look at the developments, I can think of Greylands in Harare South. I can think of Espendale again, where the developer has put the upfront costs. They've done a gated community. They've put in tara, a proper tara, not something that looks black with servicing in progress, deeds to come. If you give people certainty, people are able to pay, but trust is a very, very important component, and you must show, not believe these are people, you must show the path to progress, and then people will pay up.
Yes. Yeah. So perhaps it would be easier to constitute yourself as a development REIT if you already have something to showcase, because there's nothing that prevents an existing property developer from aspiring to then be a development REIT. So yeah, we believe in what we see. We believe in what we see, I think. Absolutely. Yes, but who's to say that there's not Mbinga sitting somewhere with huge appetite for risk? But so we can't exactly rule it out.
Okay. In the first segment, you talked about how the market being awash with Zim dollar helped on your road to IPO. And one of the questions I hear from people usually is, why would a REIT list on the ZSE that is denominated in Zim dollar when essentially the real estate market is US dollar? So the question that I would then put to you is, does the market that you are listed on matter, either you are on the ZSE or VFX, especially considering the fact that you are dishing out 80% of your attributable earnings in the form of dividend? Do you feel like it matters the exchange that you are listed on, or it's neither here nor there?
I think my view, personally,
Yeah.
that it definitely matters which
Exchange
you decide to list on, because ultimately you want to look at the state of the market. Where is the liquidity? Do people have an excess of Zim dollars, or do people have an excess of United States dollars, right? And also you want to look at the end product. What are you aiming to give out as dividend? Is there certainty in your ability to be able to give people a US dollar dividend? Or is there certainty in keeping it as a mix? Mm-hmm. So from where Tigere was concerned, because we are operating in a multi-currency system, there was that fallback to be able to declare dividends in whichever currency we ultimately collect from tenants. So you rightfully stated that currently dividends are being distributed on an 80 to 20% ratio in favor of the United States dollar, because that's the current operating environment that we are seeing ourselves in. But also looking at the monetary policy statements, etc., that are still supporting use of the Zim dollar, and Kura rightfully stated, an SI comes out at 5 to midnight on a regular day. That's our current operating environment. So it's rather dicey as a listed company to put yourself out and say, we're going to distribute dividend quarterly in United States dollars. What happens to that 20%? Because when you have anchor tenants like Pick and Pay, ultimately, the consumer wants to have the flexibility to buy bread in either ZWL or the US dollar. So for so long as that multi-currency system subsists, I think it's safer to be able to choose a currency of choice based on dictating market conditions.
So understand that a REIT will perpetually be a capital-hungry beast, right? So let's say you're Delta. I buy my shares today. Delta, internally financed, is running a new bottling plant and what have you, right? They're not coming to me as a shareholder to ask for more money. And they pay their costs. They have a sinking fund for further machinery improvement. Then after that, they sit as a board and they say, dividends. And they give us the residue, right? A REIT is structured differently. It is a capital asset that's there, and we have a right. There's my lawyer right there to explain a right? It's not a negotiation. And 80% of the attributable income is coming out of that company. So in and of itself, it does not have the capacity to increase its size. It'll hold on to the 20% for maintenance and what have you, but for it to grow, they're going to come back to us as shareholders and ask for more money. So we're going to put in more money. Now, if you are raising money on a regular basis, you're going to have to fish where the fish are. You're going to have to go where there's liquidity. And that's typically in the pension funds. They receive money from salaries, those on a monthly basis that accumulate over time. And they're the ones that you go to as a REIT for further subscription. So you want to be in a liquid market. VFX is not turning over as much as it could. And if you're in the business of raising money, fish where the fish are, go for the ZWL.
Yeah. So what I'm getting is that it was a strategic move to make sure that you list on the Zimbabwe Stock Exchange because of the things that you have said. But looking at Tigere as the only REIT that is listed at the moment in both our capital markets, that is the ZSE and the FFX, they've made a decision to report purely in US dollars. They don't have to, because if you're listed on the Zimbabwe Stock Exchange that's ZWL denominated, you have the option to report in Zimbabwean dollars. And I think for all the other companies that are listed on the ZSE, they've been reporting in Zimbabwean dollars at the moment. Of course, they can declare a USD dividend, but their financials have been in ZWL. So I think the REITs, they've set a bar for following REITs to come, because if then another REIT comes and they want to report in Zim dollars, everyone is going to ask them the question, but why are you reporting in Zim dollars when another REIT like you, who's operating in the same environment that you are, is reporting in US dollars? I just want to get your thinking behind that. What really motivated reporting in US dollars? To me, as an analyst, I say kudos to you, because it becomes easy for me to make sense out of the numbers that you're presenting to me, as opposed to the billions and trillions. But I want to understand the rationale behind that.
So, in one word, stability. Stability. If I come to you and I say I made $1 million last week, top of mind is, what's $1 million today? What is the actual profit margin that has been realized? Mm-hmm. So in terms of reporting, accounting, that stability, even though we do have inflation in US dollar terms, it's easier to track from when we started to where we are today in terms of actual realized profits, actual realized collections. Mm-hmm. So that's a big motivation. And also, I think the market is also fickle, rather fickle. Mm-hmm. If I come to you and I say, next week, I will give you $5 million if you give me $1 million today. Exactly like I stated, top of mind, you're thinking, will I actually realize the profit, or will it be a loss? Yeah. So it's the stability that comes in just declaring your financials in a much more stable currency.
Yeah, I thought the lawyer would say, for the time being. Kitten is perilous.
Yeah, interesting. This have been it has been a beautiful conversation, and I thoroughly enjoyed it, and I hope the viewers at home also enjoyed it. If we continue, to be quite honest, we'll spend the whole day here, but I just want to personally thank both of you for coming over and discussing these issues, which we believe that our viewers at home immensely benefit from listening to, especially broadening up from just the traditional real estate that we are more accustomed to these type of instruments, so that they'll also try to see if they can get exposure into those. To our viewers at home, don't forget to like, share, and subscribe on our YouTube channel. Until next time, take good care of yourself. Thank you.
Thank you so much for the time.
Thank you.
This moment was proudly brought to you by Shelter Zimbabwe. Shelter Zimbabwe. We nurture our society.